Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Thursday, May 2nd, 2013. Well, a change of trend today and a candle that's made a lower high and a lower low and a fairly large black body candle. So the sellers have made some substantial net bearish progress on the day between the open and the close. The sellers were strong enough to close the market well below the midpoint level, suggesting that the sellers have closed with very strong control, and they've been fairly strongly committed throughout the trading day. Although they did lose commitment when the market was testing down, roughly down around this 130.25 level, and we did see them lose some commitment as evidenced by this shadow on the bottom of the candle, but they still have maintained very strong control and maintained or found some very strong net negative sentiments and downside momentum. Previous day's trading, I highlighted the potential for a change of trend with this type of shooting star reversal pattern. We have had confirmation with the market making that lower high and lower low, so that has been confirmed, that reversal pattern with this very bearish candle. Now, importantly, the market has taken out the area around the Tenkan-sen, and that suggests quite a change of sentiment in this market. Prior to today's trading, the Tenkan-sen was actually pointing up fairly sharply, reflecting some solid upside momentum. The small body candle in the shooting star reversal pattern highlighted a loss of momentum by the buyers, and highlighted us to the fact that there could be a reversal pattern, and that's exactly what happened. And now we see the Tenkan-sen pointing flat, so really no great effort in terms of direction by the buyers or the sellers. Basically the sellers now are matching what the buyers previously did, so that is what the Tenkan-sen here is suggesting by pointing flat. If we look also at the Kijun-sen, that's pointing flat, and price action has been attracted back towards her, and that's what's happened. So there is still a possibility that this trend could continue to the downside. Now, where the market's trading at the moment, we took out the 130.79 level today in a very bearish manner, and the 131.45 level, some important levels within the cloud. But now the 130.79 level has potential to act as resistance for this market. So a scenario is that we could see the market rally to there and then sell off. But the 130.25 has been a very, very important level in the past, in the recent past, and prior to that as well. So that may be a potential downside barrier to this market. We also have the Kijun-sen trading at 129.93, just above the 130 level, so very, very strong support there, and down to the 129.68 level, coinciding with the bottom of the cloud. Very, very solid support down to there, so very solid support all the way down through to these levels. To the upside, once again, if the market does rally up through the 130.79 level, strong resistance at the 130.98 level, and then up to the 131.45 area. Now, in terms of the Fibonacci extension, and we're examining the relationship of the first time frame downtrend to the previous time the market was trending down, and here we've seen a bearish close down below the 100% level. We did have some price rejection from down below there, but the market failed to close. Well, it did close beyond this, so that suggests that there is potential for the market to trade lower. And we have the 161.8% level at 129.60 coinciding with the bottom of the cloud, strengthening the support down there. It will be a very, very important level if this market does trade down to that area. And just moving to the Fibonacci retracement, and just revisiting the retracement from yesterday, and this really highlights how well at times the Fibonacci ratios in many forms, and here in an expansive form of the retracement, how they can act as very, very good indicators, but also combined with your understanding of the short-term dynamics, your understanding of what's happening with price action. And here we saw the market to test up to the 161.8% level and be rejected very strongly from there, even though the trend hadn't changed. And we did have a change of control in the market, however, and that set the market up for that potential change of trend. Now, in terms of the current Fibonacci retracement, this market has taken out some very, very important levels all in one go, through the 38.2%, through the 50%, but the market has been rejected from below the 61.8%, and that could be important. tested below and closed just at that level. So the question is, will this level hold? If we see buying coming in, then there is potential for the market to trade back up to higher levels. But what we'll be looking for is early bearish activity down below that level, and we're not seeing that at the moment as the candle is developing. But certainly a test down through the low of the current candle will suggest that the sellers are attempting to take control again, and may suggest that the market may be destined for lower levels. Now the 100% level is just below the bottom of the cloud at 129.54, so it strengthens this zone of support down around this area. Now in terms of Ichimoku, obviously a neutral market in big picture terms, because the market's trading within the cloud, and now this is the fourth consecutive day that the market's been trading within the cloud, so no clear direction in terms of the big picture, so neither bullish nor bearish. But the market remains bullish in the medium term time frame by trading up above the Kijun-sen, and it has been for some time. We saw the Kijun-sen act as support over the past few weeks, and there is a possibility of that happening if the market does test down to there. But in terms of the Tenkan-sen, the market is now bearish in the short-term time frame by trading down below there, and we have previously seen the market trading up above there in a moderately bullish manner, and then an indecisive way for the previous 3 trading days. But this market is now oscillating above and below the Tenkan-sen, suggesting that there isn't any clear direction in the short-term time frame. We are seeing some sort of a large congestion area developing here, or there's potential for that to happen. So moving forward, obviously a very bearish market, a very good probability of the market testing lower. 130.25 is very, very solid support, but the support is even stronger down around the 129.68 area to the 130 area. Very solid resistance overhead at 130.79, and then up at the Tenkan-sen at 130.98.